The hardest thing about trading is that it goes completely against what we are wired to do, the way we are wired to think. Trading goes pretty much completely against all of that. And that is what makes trading hard. One of the hardest things in trading is also one of the most counterintuitive things. And that is that in order to become a profitable trader, you have to become a master at the art of when not to trade. Knowing when not to trade is possibly one of the most powerful things that any single profitable trader has in their arsenal. Because besides that, trading profitability is based on multiplying and doing over and over and over again the correct things and avoiding 99% of the things that you should not be doing. Yet, most traders think that their profitability is based on all of the winning trades that they take. But that couldn't be further from the truth. Trading profitability is based on the trades that you are taking and on the losses that you are not taking by entering only on the highest probability days. And as I said, it is something that is extremely counterintuitive because you think, no, for me to be profitable, actually, I just need to enter in more profitable trades than losing trades. Oh no, for me to become profitable, I actually just have my winners just have to be bigger than my losers. But that's not really the point, because even if your winners are bigger than your losers, but you're taking so many losers, it completely diminishes all of the value that the winning trades have. And the way you counter that is by being a master of knowing when not to trade. And now, obviously, the most important thing is knowing when not to trade. So, Kimmel, how do we know when not to trade? Well, let me ask you this. How many times have you looked at the charts and thought, this looks bullish, looks bearish, it could move to the downside. It could also move higher from here. I don't know. That's when you do not trade. That's when you do not trade. When the probability of the market moving bullish is the same probability of the market moving bearish, that is your sign to not trade. Because think about it like this. What is a trade? A trade is simply a bet that the market is more likely to, and by the way, I'm going to go way deeper into this on the live event that I'm doing on the 14th of July. I'm going to be doing a $3,000 cash giveaway and a $500,000 funded accounts giveaway. So make sure to sign up to be entered in both of those giveaways. Here's to say that a trade is just a bet that the market is more likely to move in one direction over the other direction. Yet you're trading a 50-50 market. So do you really have a profitable trade if you yourself don't exactly know right now what direction you want to trade? Isn't that incredible? Is that these simple things have always been in front of us. The idea that I am only going to enter in positions where I know for a fact that the market is way more likely to move bullish than it is to move bearish. Now I might say, Kimmel, I do this all the time. But do you? Because there's a difference between entering in a trade and knowing that there's a probability of the market going higher or a probability of the market going lower versus entering in a trade where you are 80% certain that the market is going to move in one direction, yet, this is important, yet there's still a 50-50 chance that the trade is a 1 to 2 risk reward or not a 1 to 2 risk reward. And you only enter in longs. Because on that second scenario, where you are very confident in what direction the market is going to go on, you are able to make a educated choice on what direction you are going to trade to. So for example, if you are bullish, you're only going to trade in longs. You're only going to trade longs in case you are bullish. But in case you are bearish, you're only going to be taking shorts. Now, what is this creating? This is creating incredibly high probability conditions for you to trade in every single day that you trade. It's knowing that if the market is clear on where it wants to go, you have the upper hand. But if you don't know for a fact, like 80% chance, where you think the market is going to go, you're trading at a disadvantage. It's like playing poker without knowing one of your cards, right? How incredible is that? Trading without direction is like playing poker without knowing one of your cards. Or playing blackjack without knowing one of your cards. Or doing anything with half of the information, right? So, for yourself, and by the way, this is crazy. The reason this is important, the fact, what makes this even harder, is that waiting for direction to be clear means you are not going to take advantage of every single move. And I can tell you, for a fact, that is the main reason as to why so many traders stay unprofitable or are unprofitable and will stay unprofitable. Because as humans, what do we want? If we see the market moving 600 handles, I want to take a piece of that. But you're thinking of it in the wrong way. That's not how we should think about it. You need to understand that sometimes the market is going to move aggressively, and that's going to finally give you a strong indication of where you think the market is going to go. Because if you do that, if you wait for the market to move those 600 handles, now you're entering in high probability trades that will give you the next 1.2 thousand handle move, the next 600 handle move, but with a way higher probability. It's the tough part about trading is understanding that not trading is a trade. Not trading sometimes is the best trade that you can take. For example, today, the market moved 600 handles today. I did my market breakdown. By the way, you can get access to all of my market breakdowns on the Telegram. Again, sign up to the live event. You're going to get access to both of the giveaways, live Telegram and Master Trading Direction. Then I'm going to go live on the 14th of July to explain this all in more depth. But, oh my God, I love trading. I just love it. I absolutely love trading. Because like these things have always been in front of us. But they're so tough to understand and wrap our minds around. To become profitable, you have to pretty much stop trading. You have to see the market going without you and think, yup, everything is good. I will enter tomorrow. Because what I'm doing right now is direction is not incredibly clear on the daily chart. It basically looks like a pizza chart where it's like big ranges and now they just become smaller. And I'm like, okay, I want to see a breakout to either side. I don't care. I'm pretty much neutral on that front. Today, the market is more likely to move down. I saw the price action and I was like, no, the 4 hours looking bearish, the 1 hour is looking bearish, the daily is looking neutral. So therefore, the 4 hour takes control, obviously. But I also said, listen, guys, I want to enter in a high probability trade. So therefore, I'm going to wait for a high probability day. A high probability trade is never going to appear in a low probability day. It's impossible because from the get-go, you're already entering in something that is low probability, which is a specific day. So I wanted to make this video because today the market moved 600 handles. My breakdown was I'm going to wait for that 600 handle move, and I am completely fine with it, because you have to understand, in trading you are going to miss moves. And if you are the type of trader that right now is thinking, yeah, that is just coping, that you missed the trade, no, you've completely missed the point. I want to trade when the directional bias is at a high probability level. And then all the trades that I take, they might be higher probability, lower probability, it doesn't really matter, it depends on the trade frequency that I want, as long as the directional bias is there. That is all that you want in order to become profitable. So if you want to become profitable over the long term, learn when not to trade. And by the way, I reminded myself of this because I'm also preparing the live event for the 14th of July. And yeah, I was like, oh, yeah, let me use this example as to when not to trade. Because it's all hindsight. Like, people now look at the chart and they're like, I knew it was going to move lower. Well, yeah, say that yesterday you got chopped up. Right? It doesn't really matter. Over the long term, you want to trade when we have high probability days, high probability directional plays, and that's when you go heavy. And by the way, that's when I size heavy too. It doesn't matter what market it is. Last time I sized heavy on crypto, made $70,000 and it moved on in 2 weeks, I think. Can't complain, right? That's the power of direction. And by the way, crypto, it was like 3 months of waiting to actually take one single position and then sizing as heavy as possible, because the crypto is one of those that is very, very directionally heavy, so to say. With that being said, hope you all enjoyed. Sign up to the live event, get access to both of the giveaways. I'll see you in the next one.